Hey, it's Mac with PriceActionTradingSystem.com, and it's Thursday. It is May 6th. This will be our chart lesson for today. And I wanted to leave my second entry indicator on here just a minute and just to continue to remind people that we've got it available now on the website. I get a lot of questions about this indicator, so I've been trying to just point it out that it's available in the last couple of videos. And I'll just show you a couple examples here. We were really in a sideways here, but we're moving down, and you can clearly see we're trending down here. And you can see you got a new low right there. It marks at 0, works up. There's a first entry right here. It always puts it above the bar that makes the swing high that breaks lower, and so that would put the first entry right there, even though it technically was broke lower there. Then it ran up and it made the new high here. And when it broke lower right there, that's a second entry short. And you can see it numbers at 0 for the new low, first entry, and then second entry. Same time we got one off the top. Of course, it's going to count them in both directions, but you only want to pay attention to the ones that you really only want to pay attention to the ones that are with trend. But just to give you an example, like here's a new swing high, so it's 0. And it gives you a first entry right there. Again, this makes the swing low, so it always puts the number below the bar that makes the swing low or above the bar that makes the swing high. So first entry, then it pushes down again. So when it breaks higher right there, it's a second entry long, and there's your number right there. And then of course we make a new swing high right here, so the count starts over. First entry, second entry. But again, we're looking for shorts this way, and there's your new low. First entry, and then when it broke lower right there, it's a second entry, and it marks it for you, and gives you a second entry short and a chance to go short right there. Actually, this one never breaks lower. It gives two inside bars, which you don't want to enter below those. So that really cancels out that trade. And understand, this is not showing you where to take trades. It only shows you second entries. And you have to be able to read the chart and understand the context to decide if you want to take the second entry. So don't let anybody tell you that they're selling a second entry indicator that's going to be a trading tool, because it's impossible for the software to any kind of software to determine the context of the chart. So they might be able to give you a second entry indicator that shows where the second entries are, but don't trade off of that alone, or you'll probably be sadly disappointed. And I'll make it very clear that this is not a trading tool. It's going to set up and show you where to take trades. All it's going to do is point out second entries, and it's up to you to decide if it's a second entry that fits our entry criteria and the context of the chart. And that's why no software can trade for you, because it can't read the chart. It doesn't understand the context. It'll show you a lot of second entries here that you don't want any part of. So just keep that in mind. And understand that we're only trying to find second entries here. So, but I'm going to take this off just so get rid of the clutter, but I wanted to point that out to you and just let you know. And I'll put a link in the description box back to the website where you can find it if you're interested in it. So, but let's back out here. Okay, I wanted to back out and show you the big picture, and really what we had was a range today. Prices are just going sideways. This was a really nice rally here. Unfortunately, there's just not any way to get into that real easily. That's safe. Once you recognize how strong it was, there is a second entry up here. But other than that, you don't even get a chance to enter that. It's just one of those trades. I mean, it happens sometimes, and you know, the next time you see this, what'll happen is you'll try to jump in and ride this, and you'll probably end up with a loser. So don't let the fact that you had a 40, let's just say 41, well, let's just look and see what the high of that bar is, or the low of that bar. 40, let's just call that 41.46 is the low. And this thing ran straight up to 41.79. So, I mean, that's a huge move. It's a 30-point move, and you just have to kind of sit there and watch it. It's you just no way to really get in it safely. I mean, you could jump in, and if you had of, you would have made money. But trust me, most of the times when you try to do that, you're going to get burned big time. So it's not worth it to try to chase a trade like that. And it's just unfortunate. You kind of have to sit here. There was one chance right here. If you're a pretty good chart reader, you would have seen that one and understood. Once you see a trend this strong, anything off a key entry point, you just about have to take, and there's one right here, and we'll talk about it when we get to it. But you can clearly see we were in this range. We broke lower. We didn't quite make a measured move. Here's a measured move of the range down here, and you can see we didn't make that. And obviously, when people saw that, most everybody, anybody that's a good chart reader says, hey, this is a range, and we didn't make a measured move, and we're going to, if we get back inside the range, we're probably going to run all the way back to the top, and that's what probably happened here. There might have been some news item too or something that the market liked, but I've come to learn that you can't trade the news. It doesn't matter if you knew the news in advance, you don't know what the market's going to do. It doesn't matter if it's good news or bad news, it won't ever do what you think it will do. And so pretty much the news is already baked into the market. The market's way ahead of the news. So it's my opinion, now that I understand price movements and been watching this thing for years, they write the news to fit the price action. So trying to watch the news and figure out what's going on and to try to glean any kind of interesting information for trading is a waste of time. I used to get up early in the morning and work out and try to turn on CNBC and watch all that stuff. It's a waste of time. You're just wasting your time. I mean, you might learn some interesting business stuff, but those guys don't have a clue what's anything they tell you is already baked into this market. I can promise you that. So that's why you've always heard the old saying, buy the rumor, sell the news, because when the news comes out, it's already baked in because the rumors were out there long before, and the smart traders are just following the price action and watching it build in, and it won't do you any good. So anyway, it's a shame we couldn't get that, but you can see we ran up to the upper side. There's the overnight highs. We broke out up there, bumped around a few minutes, and traded back down uh, into the 2 o'clock hour. We ended up making a measured leg up. All this was after 2 o'clock, so it doesn't really matter. You did get a chance to enter this right at 2 o'clock, like 2:03, so I marked that trade because you might be interested in that. But notice here's your first leg up. We measure it, and it gives us the second leg, and of course you move it to the low point, and that would have given you, if you got in this trade, you could have stayed with it all the way up. And again, it's a very strong trend that you could have ridden all the way up. And again, very few pullbacks, setups, that kind of thing. I don't have my trend on here because we don't care what happened after that unless you're managing your runner or something. But you can see that. And then we had an overshoot right there, most likely, and ran up, and then, but it's still going up. This is a crazy day. This was a nice two-legged correction. We'll remove that just to get it out of the way. But for the most part, we trended down and trended up, and it was just a range day. So you needed to pay attention to this range. And you can see this channel, and we actually had a close up here and a strong move down. But as long as prices continue to turn down at that trend line, you can't ignore it. So really, I was still playing the range and just trading this as part of the range breakout. So that was probably the safer play, and there's no fake outs back at the trend line. We just shot straight through it. Looked like we were going to come back for a retest. All they're really doing here is coming back and retesting the trend line break. And you'll see that just like any other support or resistance. When we broke through there, usually prices will pull back and test it. And notice how hard they had to try before they finally got back. And then they took off like a rocket. So even on trend lines, you get the retest when you push through. Anytime you push through any of our key entry points, generally prices will come back and test them. Just like when you push through right here, even when prices were going to go lower, they pulled back and tested it to the tick there and then turned back down. So that's very common. Let's back out. Already 10 minutes. I ain't even started. There's not a lot of trades today, so this isn't going to take long. So that's the sad thing. There's just not many trades today. Um, but early on, we're in this range, and then you have this leg working down, and you have this failed break lower here. Let me zoom out a bit more here so we can see this. And this is just trading a breakout. You've got all this support across here all morning long at that blue line, all overnight, all morning. So, and look how far away we are from the EMA. I marked this blue, but it's probably closer to being green. It's a little aggressive, but there's a good chance we're at least coming back to here and probably the EMA and maybe all the way back up. So, I mean, we all the way back up to here. So, I marked this one blue, but it's real close. You could argue for it to be green too, but I liked it. Just it's a mile away from the EMA. It's probably going to fail on a breakout. It's just a couple of different reasons I like that one. But we run up, and I looked at this like a failed second entry short. The reason I made it green is because we don't actually break lower here. But notice you run up, pull back, then you make the second leg up, you pull back, and right off the EMA in the midline and all that, it fails and turns back up. It looks just like a failed second entry short. You're expecting prices to go higher, back up to the trend line. It's been a range, so we could be going all the way back to the highs of the range. There's a lot of reasons to like a long right there. It's right off that key entry point. It's a third touch, so it confirms it. A lot of different reasons I like. I mean, you could almost argue for this to be blue just as much as you could argue for this one to be green. You could flip-flop those two if you wanted to. But I made it green because it doesn't break lower. And if you're not an experienced chart reader, you probably shouldn't take this trade because it's not clear cut. It doesn't follow the specific rules. And you need to be a pretty good chart reader to kind of fudge the rules and say, hey, if something looks like something and the context is right, it's probably going to act like it. So, but anyway, notice you got a new low there. You get a first entry. You run up here, you get a second entry, and you get a break. And notice that congestion. So that's like a failed breakout. It's a break above this. We had a move and a close and a new high all in one bar outside. I like going short there. Again, you're a mile away from the EMA. You're probably coming back here. And this turns out to be a pretty good trade. And then, of course, you're working down and you get a first entry long, second entry long right off support again. It fails. And at this point, you're looking for prices to make a new low on this channel. So, that's the first close outside. So, signal bar doesn't matter since it's a failed second entry long. And it's only a first entry short anyway. We actually get a second entry that triggers right there, but that's starting to look too congestive at this point. I like taking the failure, but I don't think I would enter here. And you can see it just ends up, it ends up running on down there, but it's more sideways than anything, and it bounces off the lows again. In fact, you could really go long here. Again, I didn't mark this one. It's a first entry, second entry, third entry, and it's real congestive. But we did bounce off that, and it does look like it's probably going to reject prices. So it's another one you could argue to be green, but there's just a lot of congestion there. And we hadn't made a new low yet either, so there's reasons to be concerned about that one. Of course, we do end up running lower, and there's a reversal here. Notice the new high, first entry, second entry, but it doesn't get back to the EMA. It doesn't even get back to the support resistance line to test it, so I just don't think you can enter. And again, you work down, nothing in here, maybe a long right here, because we have had a break of this trend line and a new low. But at this point, you would think we're probably going to go on down to this measured move. So it's a little dangerous going long. You need a really good setup to go long, but it's here. Notice you made a low. You test it once, you test it twice. So you get a double test there, but that looks a little congestive. So, but when it comes over here and drops on down, you could look at this as a new low. First test, second test. So, and this is also a new high, so you can look at that as a second entry. So I like this one a little better, and you're getting in at the very low of the range, and you can see how long it's been holding there. And so I like that one. It's a little aggressive again, but I marked it. And then of course you got a test right here, but when that bounced off the midline and then closed above the EMA, and you don't have much room back down here, you don't know that it's going to break out. I think you just have to wait. There's a lower high here, and this one's, again, you could consider as a lower high, but I think you need the reversal, and you never get it. It just never sets up. So, and then we finally bounce off these lows, and you start working higher. There's a second entry here. Notice that new high. It's a first entry, and then it pulls back in the second entry. But look how sideways and congestive that is. Our second entry indicator wouldn't even count that because of the congestion and the fact that this was an inside bar and all that. So because it didn't break lower or make a equal high or sorry, equal low there, you can't really use that. It's just an inside bar. There's no rule that says you can't use inside bars, but it's not the signal bar. So the signal bar always makes the swing low, and you don't break lower there. So I don't think you want to use that trade. If you took that, you know, if you said, hey, I want to be a little aggressive and take that, you could, but I'd skip that trade. And again, we run on up, and we just start working sideways again, and there's no real reason to be thinking long necessarily, and there's no real reason to be thinking short. There's one possible long right there. Here I'd be waiting on a second entry. You've already had what looks like a possible close outside. Of course, you could argue that, hey, maybe this is just a little flatter. So it's really hard to say right there if there's been a break. So it's not real convincing, in other words. And so you get a first entry, second entry, but your signal bar is no good. And then you're just going sideways again. You might have gone long right there. That's another one you could argue to be green. But with the bias being mostly down and all that resistance right there, you know prices are probably not going anywhere except for back to here. And so do you want to risk that one? That's what you're looking at for just a scalp, because that's mostly probably all you're going to get out of it. And you did make a high. Notice that high is higher than that swing high, and then this one's lower, and then this one's lower. That's giving you some clues that how we make break lower, but I don't think you want to go short right into that support. Just can't do it. And then we're bouncing and heading into this huge uptrend that we talked about, and you can see there's no entry down here because there's no setup. You wait on something higher or a reversal, and you don't even get that. It's just taking off. Notice here you do make a high first entry, and then a second entry when that broke higher. So it's mostly sideways, but the reason is it's not necessarily congestion. The reason you got all that sideways action is this is a strong bull trend, and the corrections are going to be very shallow. So there's actually, notice you go down, back up, and back down, and then you take off. That's a two-legged correction back to the key entry point. You need to understand price action to see that, but hopefully now that I pointed out to you, look at the new high, it trades down, makes a low, trades back up, trades back down, and then turns up off the key entry point. That's a second entry long, and it's two legs back. It's not very pretty, but that's because we're not getting any correction. And look at it go. Smart traders see that. People, the skilled and experienced chart readers see that, and they get on with it, and they know this is a strong trend. We run on up. There's a first entry here, but there's your signal bar. It makes the low. You can't enter there, and it doesn't go very far. Then you're running down first entry. You're running on down. There's a second entry long right there, but it's still inside this little spiking channel down. It would have worked, but I don't think you want to take it. But you do get a break and a move to a new low, and you get a nice bar. It's a little ways away from the EMA. I like taking that one because it's really the first break of this huge bullish trend. So the odds are we're going to retest that high, even if we're going lower again. When you get a trend that strong and it's very rare, especially without an overshoot. I mean, it's so strong you probably couldn't get an overshoot. You just start to see the momentum wane a little bit there. You get your break, corrects pretty well, and then you go off to make the new high, and that's what happens. I like this one. Normally, I'd probably mark that aggressive in a regular market, but with this a regular type day, but with that trend up, I kind of like that one. It's close to being green. Smarter trade is probably wait for here. It breaks lower, fails, turns up, gives you a higher low. Nice bullish bar. Just go long right there. As long as you got plenty of room back to this high, you want to take that. And you can see it runs up to a new high, and then we start working off. And also, you got to remember this was the resistance for the channel. We broke out here, and we just start kind of chopping along. At this point, this would have looked like this right here. And I marked this one because it's a second entry short, and it's a failed second entry long. Notice first entry goes down, second entry. So it's probably going to trap some longs, and all these longs that have been on are probably going, if it breaks lower there, they're probably going to exit. And you can see it does. It takes it a minute, but it works on down. And notice there's another new high. You try to go higher once, twice. So another failed second entry long, and now we're underneath, and we've tested it underneath a few times there now. So, and you can see that's when most of the weak longs jumped out right there. Boom. That's what causes that big bear. A bunch of them jumped out right here, and then a bunch more jumped out right here. You can see how bearish those bars are and how quick they move down. That's why, because shorts or long traders are exiting. You work on down, then you bounce first entry, second entry, right off that key entry point. It breaks higher first and turns down. Another great setup. There's another new swing high there. So you get a first entry, a second entry, and then you get a first entry, second entry short. That's a little sideways, but you don't really have the bar with no body or a very small body. I mean, that's just a small bar there. So that just looks like up-down action to me. And when it breaks higher, the trend is down on that third attempt and fails. Again, look how it rockets down real quick. And same thing here. They keep trying to buy this thing all the way down, and finally a lot of them give up here. Boom. And it just keeps working lower. But notice you get the break, then an overshoot, another break, and you move to your new lows. And then, of course, you're trending up again. And that's where your second leg up came in. And you got another one there. But let's back up. We missed a few trades here. I talked about that one. And then we've got this one, which is just a triple test up there. Tried to go higher a few times. It's a little aggressive, but it's pretty much going sideways. And this does have the small or no body. So this is definitely a little range. You break out the bottom, you break out the top. The trend is down, so this would be the way you'd probably look to enter. And off it runs down to try to make a new low. Then you just kind of get to working sideways. This is just a range. You've already had your break and new low. So when you get this, I don't have my little range drawn there. It's just a little tight range, and that's a little failed break lower. Chance to get, look how many times we bounced, how far away we are from the EMA. You could almost argue for that to be blue. I like it. You get a higher low here, it pushes out the top, pulls back, tests it, goes higher. And then you actually get a failed second entry short. It actually was a failure here, but then that's a second entry. Notice the new high, first entry, second entry. This is after 2, but it's just like 202 or 203 or something. So you can see the time there, 203. Normally I won't mark any, but it's kind of a slow day. And if you're still trying to get a trade in, there would, right at 2 o'clock, I wouldn't have a problem with that, especially on a good setup like that. And that was it. This was a long chart lesson for not a lot of trades, but and this is the one that really It's just really frustrating. But that's the one thing I want to mention before I call it a day here. Um, just remember that you can't chase these trades. Like I said, the next time you see this, this is what the market will do. It'll throw you something like this with no good trades. And weak chart readers don't understand that there's no good trade in here. And so they'll say, and next time it starts doing this, they'll say, I remember that doing that, and they'll jump in. And that's probably what's happening over here. You still get this second leg up, and there's some big moves, but look at the corrections. They're much bigger. And I guarantee you, there's a bunch of traders that watch it start moving, and they say, I'm getting in here. If it goes higher and it breaks higher, they get in, and they get stopped out, and it goes straight up. And then they're saying, shoot, I knew I should have stayed in. And then it gets up here, and they jump in again up here, thinking, all right, here we go again, and it corrects on them, stops them out, and then goes right where they thought. It does that multiple times. That's what happens here. People start taking profits, shorts trying to start picking tops, and you get a little momentum, and it gets back to the key entry point, and all the smart traders come back in, and boom, off it goes again. And the dumb traders get stopped out because they were entering long up here instead of waiting for the correction at the key entry point. You enter along this key entry point, not anywhere else up through here. So keep that in mind. I'm going to wrap it up. Hope you had a good week. Hope you had a good trading day today. There it is again. This is really a reversal type day is what I would call this. We went from a sideways to down to an uptrend, and this is just a correction between the two legs. So, but I'm going to wrap it up. We'll be back again to do it Monday. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next